And it's just a math thing. So if someone's skeptical, they should be, because it's not magic, it's just math. And so what we're doing is we're using a compound interest generating account through insurance. We're using the insurance benefits to be able to flip that compounding interest that people are paying. One of the things that we do is we educate people on what's called the effective interest cost. You and I were just talking about this. And when somebody actually looks at their statement and they look at the dollar amount that they're spending on taxes and they divide that by the payment they make and they see how much of their effort is actually not going to eliminate the debt, we're just simply shifting that money that they're paying and showing them how to earn it. A lot of major corporations have policies like this. This isn't anything new. This is something that Wealthy's known about for a long time. We're just able to bring this mainstream to the average person now.
Hey, welcome back to the CA Power Player Podcast. I'm your host, Cody Askins. I'm in the Trustworthy Financial office with Mr. Mike Hall. So we did an interview. We did it earlier, but we released it months ago, right? And it was more about like you and your why behind what you're doing, like really why you're really moving to this debt elimination, debt-free piece for debt-free for life, which was cool. And dude, I just maybe we should just do it. I don't know. What do you guys think? We should just do a podcast every day with Mike. Freaking, I love hanging out with Mike. Okay, good energy, man. This episode, I really wanted to focus more on. Welcome back, by the way.
Thank you.
I really want to focus more on like why you're like the details of how this like debt elimination things works. Obviously, there's skeptics out there naturally with anything, right? And if that's you, like let us know. I'm a skeptic.
You should be.
Yeah, and I agree with that. But there's also like some other stuff that you're doing before we jump to that I wanted to share and talk through, like from a charity and nonprofit standpoint that you get behind and that you're giving and passionate about. And so I wanted to kind of show that side of you too, if you want to like talk through that. So,
well, you know what? First of all, I've always had a heart to help people, but I've never wanted to go do something across the world. There's so many people that need help right here where we're at. There's such a difference that we can make here locally.
I've kind of always thought that too. Just for the record.
Yeah, you know, so I was skeptical even when the opportunity even came to me. But so I moved my family to Indiana 6 years ago, and I moved here before COVID, and I moved out here because the opportunity was here in the Midwest. We didn't have any leadership out here, and I specifically picked up and brought everybody out here so we could have a better shot of expanding our business. And so me being an introvert, me being somebody that doesn't go out there and network and say, hey, what do? Do you look for other? So I thought, okay, well, how am I going to get out there? I don't know anybody. It's a brand new city. How am I going to let people know we're hiring? So I made a commitment to myself. I said, every client that I sit with, they believe in what we do because they filled out the card, right? So I'm going to let them know there's an opportunity. And one of the very first clients that I met when I came here to Indiana was this young Nigerian family. And they weren't making a ton of income. And at the time, well, they were making about $300 a week in income, husband, wife, and daughter. And at the time, we were letting people know that they could work part-time with us for about $1,100 a week in income. And I thought, there's no way I can say this lady, but I've got to be true to myself. I made the commitment. I was going to let them know there was an opportunity, and I'm going to let God do whatever he does with it. So as I'm walking out the door, I said, hey, Emma, I said, my company's looking to hire some people just like you, and you could make an extra $500 a month. Well, she was like, $500 a month? Are you serious? Like, you got to be kidding me. Well, long story short, we got her license. We started working with it. Well, she found out that my dad was a pastor and that we've got other nonprofits, and he's done a lot of work in Haiti over the years. Well, she was telling us about this nonprofit that she started back in, I believe it was 2007. And one of the big things down there is, one, witchcraft is really bad, and two, the sex trade is really bad. And so one of the things that she was doing was she would go back there a couple times a year, and she would teach other ladies different skill sets that they could do so they wouldn't have to sell their body. That way they could make money, take care of their family. Awesome. And so we were part of this planning a trip for her to go in the month of June 6 years ago, or maybe it was 5 years ago. And she went and she came back. And she's showing us all these pictures. I mean, she had this one little lady had hundreds of volunteers down there helping her. They did like over 2,000 surgeries between like hernia surgeries and eye surgeries. That's a whole nother story. Like her dad died from a hernia surgery, and that's the majority of what they do down there right now is they help people with hernia surgeries. But anyway, she's actually, believe it or not, her grandfather was the king there. And her dad actually gave up his heir to the throne because he wouldn't denounce his Christianity. But anyway, so she gets back from this trip, and she said, "Mike, my heart is broken." And I said, "Why?" And she said, "Witchcraft is so bad where I'm at that literally when anything goes wrong, they throw these kids out on the street, 3, 4, 5 years old." And she's like, "What can we do?" And I'm thinking, I'm just trying to take care of my family. Like, what in the heck could little old me do here? And to be honest with you, I tried to get rid of her. I was like, I don't know. Go figure it out and let me know what options you come up with. Hoping she wouldn't, I mean, I'm just being honest, hoping she wouldn't come back to me.
Yeah.
It wasn't 24 hours later, she came back and said, "Mike, I found a house that we can rent for $1,500 for the year." And I thought, okay, I can handle $1,500. I don't know where this is going. I don't know what we're going to do with it, but sure, I mean, that's an incredible deal. I can do that. The next day she said, "We need to dig a well. It's going to be $800. I said, "Okay, I can handle that." Well, we ended up stumbling into a children's shelter, and she actually named it after me. I told her not to, but she actually named it the Mike Hall Jr. Children's Shelter.
Wow.
And we started with like 3 or 4 kids. Well, today we've got 24 kids in there. We've got 7...
That's cool. 7
full-time caretakers, and we cover everything: their education, their food, their clothes, their medical expenses. We've been renting a house for these last couple of years. Well, the Nigerian business, the guy that owns the property, he knows that it's Americans that are funding it, so he's been doubling the rent every year. And so we found our way in. Somehow, God bless us with a plot of land. And so we're actually in the middle of building our own house right now. So it's a big house. We've got 24 kids in there. We do all their. It's been incredible to see the difference that we've been able to make. And so now we're even starting to like a child sponsorship thing so that we can actually get these kids taken care of. But the need is so bad that we've actually had to send a bunch of kids away. Like we just can't. We're at capacity. We can't bring any more in. Jeez. And but it's something that I'm really excited to be connected with this lady because she's a real difference maker. She's from there. Her passion is to actually move her and her daughter there so that she can run it full time because she just loves these. Like she's willing to give up she's there right now. She's there for the next 2 months. But she's willing to give up all the comforts of her life so that she can go make a difference down there. But she's an incredible human herself, and I'm honored just to even be a little part of it. But she's the difference maker with it.
That's so cool, man. Like there's still so many the crazy world we live in. There's still so many special people.
But Cody, it came from this silly little business that we do, and me having the courage to do what I said I was going to do. I didn't do any of this. God set all this up. I'm just walking through and doing what I committed to myself I was going to do, not knowing that we were going to be able to make that kind of impact on that many people halfway across the world.
Yes, special. That's awesome, man. That speaks to also volumes of you and who you are, and like I can do more and be better in that part of my life too. So I appreciate you sharing that with everybody. That's really cool. And what you're really starting to focus on with Debt Free for Life and debt elimination, like it's actually going to help you do more of that, which is cool, right? And so you find what's her name, by the way?
Emma.
Emma's able to find a business that can fund a passion.
Yeah.
And that can be true for a lot of people in some way, which is really cool. That's what's so special about this business. Why? So for those that don't know, like what debt elimination is and how that works, I mean, eliminating debt, but there's a little more to it. And some people are like, I don't think you can take, like if somebody has a 30-year mortgage, how, on average, how soon could they pay it off?
It's not something for everybody. They've got to be in a position to either already be spending extra on their debt or be in a position to do that.
Got it.
So it's not debt consolidation either.
Got it.
But if the sweet spot is really $500 to $1,000 a month, and most of the people that I come across are spending that between all their debt combined, not just on their mortgage. If they're spending $500 or have the ability to, chances are we can help them. And it's just a math thing. So if someone's skeptical, they should be, because it's not magic, it's just math. And so what we're doing is we're using a compound interest generating account through insurance. We're using the insurance benefits to be able to flip that compounding interest that people are paying. One of the things that we do is we educate people on what's called the effective interest cost. You and I were just talking about this. And when somebody actually looks at their statement and they look at the dollar amount that they're spending on taxes and they divide that by the payment they make and they see how much of their effort is actually not going to eliminate the debt, we're just simply shifting that money that they're paying and showing them how to earn it. A lot of major corporations have policies like this. This isn't anything new. This is something the wealthy has known about for a long time. We're just able to bring this mainstream to the average person now. So I've got one for my wife and I. We just bought our home on New Year's Eve of 2020.
Congrats.
We'll be 100% out of debt through this program by February of 29, and we'll have almost $400,000 in a cash account so we don't go back into debt. And I've already run a couple of illustrations. If I took $100,000 out in year 11 out of my cash to go buy a car, and I paid myself back with $20,000 a year for the next 5 years, I would actually have $140,000 more than I started with 5 years ago, and in my account, and I would have a car paid for because of compounding interest. So it's not, we use a whole life product. Not all whole life products are equal, right? And so it's a non-direct non-direct recognition dividend participating whole life. And all that means is that when we take a loan, it's not coming out of our cash value. It's a low interest loan from the insurance company. Okay. And we're earning more interest in our account than what they're charging us. So even though we're borrowing money, we're still netting a positive. And then we're paying ourselves back. So it's a whole life that's kind of set up like an IUL.
Okay.
Well, we add a term rider to it, so it keeps it from becoming a MEC. And it's got what's called a paid-up additions rider that allows you to pay more premium in. So it's basically, if you look at the traditional debt snowball, the way that works is you pay the minimum on all your debts. You take every bit of cash that you can find and you throw that at the smallest debt until it's completely eliminated. Okay. Whatever you were putting on that debt, once it's eliminated, you put the entire thing on top of the minimum payment on the next one, so on and so forth until you're out of debt. It works 100% of the time, but the problem is my wife and I did that 20 years ago. We paid off $50,000 when we barely made $50,000, but because we were living on ramen noodles and water, we went right back into debt. Things need to be replaced after that time frame. So now what we do is we just modified the snowball. So when you pay that debt off, instead of paying the extra money on the debt, we're putting it in what we call an SDIC account, especially a design insurance contract. And so maybe I'm starting with $500 a month in my insurance policy, my debt elimination policy, and then I pay that first bill off. Maybe that first bill I was paying $150 a month on. Well, now what happens is once I pay it off, that next month I add that $150 a month to my insurance premium. So for the 10 years, if I'm paying, let's just say for a round number, it's $5,000 a month between all of my minimum payments and what I'm paying into this policy, my budget's going to be $5,000 a month for the next 10 years. So as I pay it off, I'm not paying less. I'm just shifting. I'm redirecting where that money's going.
Got it.
So now the money's going, just like anybody that's got investments, right? If they've sold a company or whatever and they've worked really hard, the smart people are not going to touch that money and they're going to live off the interest of it. It's the same kind of a smaller concept here.
That's really good. I didn't understand I assumed when you paid off something, let's just say it was credit cards, whatever, right? I assumed when you were paying $150 a month, I assumed when you paid it off and the balance is zero of that specific debt, that the $150 you would just stop paying. But it makes sense to actually keep paying it, pay it into the policy, so that you can get all of your other debts paid off quicker too. So that's cool.
Imagine when it's all paid off and you got a chunk of money in there now. And the one thing that we know is when you spend $1, it forever loses the ability to work for you. So now you're not taking money out of your checking account, right? And it's gone and forever gone. And now you're not going to get a loan and paying double on it. Now you're actually making money on your own business. Now maybe you want to go buy another house and use that money as a down payment and pay yourself back with interest.
Yes.
Maybe you want to go start a small business. It's pretty neat.
And it normally, I've heard you talk kind of, so it's kind of like, okay, if the household needs to be making doesn't have to, but needs to be making six figures or at least be paying an extra $500 or $1,000 a month on their debt?
Yeah, it could really be, it doesn't have to be the six figures. That's really what we pinpoint, but you just have to either be in, look, we can't work magic, and it's not that consolidation. You do have to be in a position where you're either already paying, and we can do it with as little as like $300 a month, but really the sweet spot is $500 to $1,000.
Okay.
So either already be paying that extra between all of your debts or have the ability to do so. Now, here's another neat thing about it, because there are other programs similar to this. One of the things that really sets us apart is we've got a communications feature with it. Every single month, I, as a client, and all of my clients get a text message that say, Cody Askins, keep up the great work. Your debt-free for life plan is working. You're well on your way to being debt-free for life. And so if you don't do that, people are going to look at it as another bill. And then they're going to want to cancel the insurance policy.
Yeah, that's what I wondered, because if it's like, if I've accumulated this money, I'm supposed to pay off this small bill along the way and pay the smallest first. If I'm supposed to pay this bill and the money's there, but if nobody reminds me.
When it's time to pay the bill, you get a text that say, Cody, it's time to pay off that USA loan for $30,000. Call me today. Mike call, and it's got my cell phone number so I can help you do that.
Okay, so that's great, because that was one of my biggest skeptical points is like, okay, I'm going to forget, and then it's not going to work. It's like, because a lot of people, it's easy to like sell stuff and like the vision of something, like, oh my gosh, this is going to happen. But then we're just assuming the consumer's going to keep up with it on the back end. There's a lot of stuff like that, right, in general. I'm not saying just this. But the fact that there's actually a communications feature built in to remind them to do what they intended on doing with the money when it's available, so they're actually doing it. Because it's one thing to sell them a debt elimination policy, but if it doesn't remind them, people get busy.
Life happens.
Or even if you're not reminded, even if you don't remind yourself as a consumer to go actually do it, it's cool, you're paying a bunch of money in the policy and agents getting commission, but nothing's happening.
Yeah.
And then it's like, it's cool because the money's accumulating and you could start doing it, but it's not going to work if you're not also paying off debt and then adding that premium in. I didn't know that piece at all. I didn't know those couple pieces that you just talked about.
Well, it's a long-term relationship, right? Like, this isn't something that we're trying to sell people on. We're getting them on. We're showing them the math.
Yeah.
And if like, I had a guy that I sat with last week, and he's like, well, I could do between 500 and 1,000. There's most months I could probably do 1,000. I said, most months or every month? He said, well, probably most months. I said, well, no, we need to look at 500 then, because this can't be a burden. It can't be a stress. It can't be something you look at as a bill.
Could he do 750?
Yeah, absolutely.
Okay.
But and that's really the sweet spot. That's where most people are, 750.
Okay.
But the other
That's
thing
still
about this
$9K
program,
a year in premium too, initially.
If someone is paying 750 instead of 500, it's not going to get them out of debt any quicker. The only thing it's going to do is give them more money in their policy at the end of the 10 years. So if they go up by $500 increments, it shortens the debt time. So if they're not going to do $1,000, unless they just want the extra cash, or they could clearly afford it, and it's not a burden to them, I'd rather someone just do 500. And then on those extra months that you've got extra money, you put that money in your savings account, and now that's an emergency fund that when the air conditioner goes up, when the car breaks down, you don't have to take from this. At the end of the day, we can't force somebody to take that money and eliminate the debt. So they've got to want this. They've got to be connected and committed to it, because they could take that money out and they could use it for whatever they want.
True.
So
that's cool.
Yeah.
That's special. I love that. Well, what's the biggest question you get asked when you're or that agents get asked when they're helping? Because you just did how much in premium of this recently?
Well, just with this new lead system we've been working, I was able to write like 66,000 in premium in like 2 weeks. So I'll get paid on half of that, right? So it's like overfunding an IUL. So the commissionable part on that would be about $33,000.
So you only
that's 30, with everything else we've got going on.
Only 30, and he's busy. He's got like a bunch of agents, and he's writing other life insurance policies, but I wouldn't want 33 grand into every 2 weeks either. That was.
And look, it's not a quick answer, right? It's not quick money. Yeah. It's not simplified issue. It takes 4 to 6 weeks to go through. But when I think about the average American out there and the fact that people need extra money, dude, I look at what we do. I don't think of too many more noble things outside of what we're able to help people with in insurance in general. And to be able to help someone with something that strikes such a nerve like this does for the average person, think it's going to be special.
I do too. I think it's truly special. Yeah, I think it's cool that it's. I mean, again, it's got. I said this on the last episode. Like, it's got my attention. You know, it really does. Like, it's that unique, that special, and it allows an agent to help someone with something other than just helping them when they die.
Yeah,
which is pretty sweet.
You know, that was the thing about the living benefits, right? You don't have to die to use it, but this is even like, this is short term. This isn't, well, what if something happens later in life?
Totally.
This is right now, immediate. And so there's
it's
a couple
an easy
things.
conversation starter too. Really easy conversation starter.
The only reason someone's not going to do it is because they either don't believe you or they don't have the funds. Why else wouldn't somebody do it?
Mm-hmm. I don't know.
We're using life insurance. We've got a software, and we've got a communication system, so that does all the work. So it's just us being able to be transparent and vulnerable and educate, not sell. Like, I walk people back, I don't sell them. Mm-hmm. And then when I meet with somebody, we've got this small little book. It's 44 pages long, and it just solidifies everything. So everyone I meet with, I mail them a copy of this book, and that way they can read it, and it just makes more sense. So when I meet with them the second time, so I typically meet with clients every week until it's issued. So we have the initial appointment. We take the application that night to get the underwriter approval. We come back a week later just to make sure that they're on the same page. We tighten up all the numbers on the debt. I've already mailed them a book by that point, so hopefully they've received that and they've watched it. And then we just communicate each week after that through either text or a short phone call just to update them. One of the other things that really makes people feel comfortable with this is that we don't take the payment information when we take the first app. We're able to get everything in without that, and that way it makes them feel comfortable, because if I'm meeting you the first time and you're processing this, we're only going to retain 10% of what we learn anyway, what we hear anyway, and you're going to be like, what the heck did I just do? I just gave that guy my banking information. He's going to get $1,000 a month. So it's a slow thing, so we can make sure that they're comfortable and they understand it. So then we come back the next week, we tighten up the debts. Maybe it's 4 weeks before it's approved. We hammer down the number that they're comfortable with. And then, so I met with the guy in Jersey last week. He wanted to do $2,000 a month for his policy. He's a business owner, got a lot going on. His wife wasn't on the appointment with me. I had my follow-up appointment with him a couple of days ago. Him and his wife were in there. And he was asking me, he said, Mike, and I don't mean to offend you by this, he said, but how do we know that this is legit? Like, how do we know that you're not taking advantage of us? I said, well, really what it comes down to is you've got to trust that what I'm that I'm being transparent and legit, and you got to just believe what I'm telling you. I said, but here's the thing. It's just math. It's not magic. It's just insurance. You've got full control of it. I don't ever touch your money. I'm just the facilitator that connects you with the insurance company. And he said, and his wife is sitting there. She's asking all these questions. She's like, man, this is really good. He said, what if it's tough to do the $2,000 every month? He said, could we drop it to $1,500? And I said, well, if it's tough to do the $2,000 every month, we don't need to look at that. I said, I don't even want to look at $1,500. So why don't we look at $1,000? I said, let's look at $1,000, because if you think you're comfortable with $1,500, let's just see what $1,000 is going to do. Do you know I was able to adjust his numbers? It gets him. It still cuts off over 24 years on him paying his debt. It doesn't get him out a day later. He's still out of debt in the same 10-year time frame. He just has half the money in his cash account, but he's still going to have a six-figure amount that he's going to have access to keep from going back into debt. His wife, they were never more solid. They're like, oh my God, this is so exciting. We've got to do this. I can't wait. I'm in. Like, let's go.
That's so cool, dude. Gosh,
that's a
so
typical
cool
type of response that we're getting from people.
It'd be a great response to sit there and help people with all day too. You know, if an agent's like, okay, you got my attention, I want to learn more, how can they do that?
Yeah, getstarted.trustworthy.life. There's some videos on there. You can connect to one of my team members right away, and then we'll be able to get you in and answer your questions. We've got a complete system from start to finish. It's self-study. We can teach you exactly how to do it. We've got a lead program if you want access to that. There's even a possibility to get in without any upfront cost on the lead program, just to see if it's something that you're meant for, see if it's something you're going to be able to swing. But and if you're building an organization, right, it's a great way that you can build an organization without people having to make that commitment to see if they're going to be any good at it.
Totally.
At the end of the day, if we don't do this right, it could be bad. So we want to make sure we have the right people, that we're taking care of clients the right way, but for the right person, this is a win-win-win.
It's good. Get started. .trustworthy.life. Interesting domain of .life, but it's cool though because I like it because that's what he does, right? Get started. .trustworthy.life. Links in the description below. You can check it out. Mike, thank you for being on the podcast once again.
Yes.
For like the, third, fourth, fifth time. Either way, I love hanging out with you, brother. Appreciate you.
Thank you, man. Me too.
If you enjoyed this with Mike again, not only let us know, but reach out to Mike, man, okay? On Instagram, Mike Hall. I think it's like M-A...
Hall79.
M-A Hall79. Let him know what you think. Follow what he's doing in his journey, and go helps people get out of debt. See you on the next episode.
Let's go.
Hey, if you enjoyed this, I got another one you're going to love. It's right there. Click on it. See you in there. I'm so excited for today's CA Power Player podcast. I'm your host, Cody Askins. We got a special guest. He is back on the channel talking about how to sell life insurance from home. Here's what I love about this person. Yeah, I'm telling you, this will be one of the best.